Good afternoon, everyone, and welcome to another InvestSMART webinar. My name is Mitchell Sneddon. I am the Head of Portfolio Services here at InvestSMART, and I take care of all of our invested clients with us here and across a range of portfolios, and also, of course, the people who subscribe to our subscription service as well. Today's webinar is going to be about getting started investing. So what you need to know about how to actually get started on your investment path and reach your overall investment goals. So we'll just wait a minute because it's only just turned 1 o'clock here. We'll just wait a minute for a few more people to join us, and then we'll get going with today's webinar. Now, do remember the webinar is interactive. There is a box there for you to ask your questions. So please type your questions in there, hit submit. They'll come through to myself here, and I'll do my absolute very best to answer those questions. Do keep in mind as well, though, that it'll be general advice only. I cannot give any personal specific advice on this webinar. I don't know anyone's personal circumstances, and so it'll be general advice only. So we'll give it one more minute, and we'll then look to kick off with the formal part of the webinar. Thank you. Okay, let's look to get started here. So what InvestSMART does, overall, what we aim to do is help all Australians grow and protect their wealth. It's a pretty broad statement, but when we say grow their wealth, we mean invest their savings or their current superannuation, etc., to reach a very specific goal. And so that's what I'm going to focus here today on is those goals, aligning your portfolio with those goals. Getting the right diversification for your portfolio, and then going through your investment options, and then taking a look as well at our portfolios. So I'm going to log in here now. Just going to click on log in to get started, and I'll go into a different a different email address here. Won't be a second just to log on. Okay, so we're logged in here. Now, speaking of goals, I'm going to, one of the first places I'm going to go to is up to my portfolio. Now, if you have not already set up a portfolio or you don't actually have a portfolio, it doesn't mean that the My Portfolio section is completely useless to you. There's actually some really, really handy things in this My Portfolio section. So I'm just going to click on that. Now, as I mentioned, if you have not already set up a portfolio, this particular system here, once you do click on that, it will walk you through actually setting up a portfolio. If you don't have anything in there, don't worry about setting it up. Just skip it. Leave the portfolio blank. You'll still then create this dashboard setting here, where you can come through to and see your actual portfolio. Now, the reason why I wanted to take you through here, whether you've got a portfolio or not, is to come into check out these two sections here, the risk profile and the goals section. So let's jump on into the goals section here. Now, investing for me is all about knowing why you're doing it. So we don't just start out investing just because it feels good or it's good to tell our friends that we're invested in the market and it's good to talk to them about it. We invest for a specific end goal, either to build up a nest egg so you can retire early, or build up a nest egg so you can be financially independent and do whatever it is you want. If it's retire, great. If it's not, it just takes you want to keep on working or have financial independence, etc. That could be a goal as well. It could be saving for a house, so a longer term savings goal, or it could be a shorter term goal, like say saving for a car or a holiday or something like that if you are younger. For the majority of us though, there's two core things that we save for. One, it's our retirement, be it in our superannuation or building a nest egg outside of superannuation, and two, it's for an actual house. So we've developed this goal setting here. So how I've gotten here, once again, is I've gone to my portfolio, and then I've gone down to the goals section. And so you can see here, we've got a few broad goals. So we've got saving for a purchase, be it a car, a holiday, or a home deposit as well. Saving for a child's education, say you've just had a child, or your son or daughter have just had a child and you've become a grandparent, and you want to help out and you want to chip in for their education, which is becoming more and more expensive. It's gone to the days when I went to school. It's becoming a lot more expensive. And so you want to actually put aside some money now to have the power of compounding on your side in, say, 18 years' time, when that child then goes off to university. Or, of course, you want to start saving for your retirement. So we've got these three key savings goals here. And just for those of you as well, to let you know, we will be actually building this out a little bit further, because we know there are more than three core savings goals that people use, that people aspire to. So, but this is just for a start. So we are going to be building those out. So let's say I'm saving for a purchase. I'm going to click next here. Okay, so then I've got to sort out my goal name. Let's say I'm going to be saving for a house. In dollar terms, how much do I need? Let's say I need, for a home deposit, round number, $100,000. And how many years do I want to achieve my goal? Let's see. Save that. Let's say over the next 7 years, I want to achieve that. Okay, so now I need to choose my risk profile. So, but let's see here. So basically we've got a risk profile of high growth. What is that risk profile? Now the description here tells you a bit about what that is. So a high growth risk profile, you can scroll on down and you can see here it says that I'm interested in capital growth and accumulating wealth more quickly relative to your investment time frame. I understand the cyclical nature of investments, and I tell you what, if you've been investing in the last over the last couple of months, you certainly understand. Hopefully, you understand the cyclicality of what we're going through. It's not just all boom. I know some investors who have come to this market and say have been investing for the last 5 or 6 years, probably think the market only, up until a couple of months ago, probably thought the market only went one way, and that was up. We'd forgotten what a bit of volatility felt like, and so recently we've certainly been reminded of that. So basically, if I was to select this particular goal, my asset allocation for this goal here would align on, like, the lineup of that asset allocation is here on the right hand side. So I've got Australian equities, international equities, property, cash, and fixed interest. They're the 5 core asset classes with which we look to invest in. And so you can see here in a high growth setting, what a high growth portfolio to us would look like. It's predominantly Australian and international equities. It's got a little bit of property, it's got a little bit of cash, and a little bit of fixed interest there as well, but predominantly, of course, international and Australian equities. Now, say, for example, right now, this particular portfolio setting, if we were going through this downturn, yes, it would be marginally less volatile than the broader market, because we've got a chunk of cash and fixed interest there. But of course, it's not going to be not going to be quite as correlated with the market, but it's not going to be too far removed, because it is a high percentage of Australian equities and international equities. So I'm not going to select that. I might just click on growth here. Let's scroll on down here as well, so you can just see what that growth setting looks like. 29% Australian equities, 29% international equities, a bit of property, a bit of cash, and you can see that fixed interest component has really increased quite a bit. You can see my investment time horizon here. It's 7 to 10 years. I believe the growth portfolio there was about 10 years plus, because you need to be looking to invest through different cycles with the riskier asset classes. So you can see that there. Now, so what I'm going to do, I'm going to select these profiles. So click next. Now my expectations here. So goal setting is all about managing your expectations. So now this is actually pulling data through from this portfolio that I've already got selected in here. But say if I want to, say go back, I've already saved $10,000. Okay. I've got a time frame here of 7 years. I want to get to $100,000. I've currently got a monthly contribution in place here of $500. And so this particular, my expectations here are telling me that I won't quite meet my goal by only having a 7-year time frame and starting with $10,000. It's telling me either I'll need to adjust my time frame. So if I'm only wanting to contribute $500 a month, I'm going to have to increase my time frame, or I'm going to have to increase how much I'm investing every single month. Let's say if I increase that by $500, so it's telling me exactly that if I wanted to hit this goal in exactly 7 years' time, I need to increase this current contribution by $448. Let's just go to $1,000. Okay, let's scroll on down and see what that does now. Excellent. So you can see here, I'm actually going to reach my goal sooner. I'm going to hit my over that 7-year time period. My projected target here with a growth-based portfolio will actually be $124,725. That's not too bad over 7 years with a starting portfolio of just $10,000 there. So you need to know what your goals are before you start investing. So I can now go ahead and set this goal, and so I can come back and reflect on it and make sure that I'm still tracking in line with my goal. So you can see here, this actually shows you how you're tracking along with your particular goal. So you can actually set up a whole portfolio based around one particular goal. So there's no limit in the portfolio manager system here to the number of portfolios that you can set up. So here I've got this one now actually tied to the current portfolio that I've got. I'm going to hit confirm my goal, and that's now saved. Excellent. So going back to this initial goal setting section, investing, let's see, so I'm going to restart the goal. So now I've already saved one there. So choosing my initial goal, and once again, I would highly recommend having a different portfolio for a different goal. A shorter term goal is going to take a less risky portfolio. A longer term goal, you can have a high risk portfolio in place there. So say if I, for example, had set my time limit, let's actually go ahead and do this. I'm going to save for a purchase once again. I'm going to show you what will happen if I choose a risky portfolio. Let's say I want to achieve that in 4 years. Hit next. I'm going to select high growth, and I'll show you what happens here, because this portfolio, that portfolio approach, and here it is, that I am selecting does not align with my goal and my time horizon. So it's telling me here, are you sure you want to set your risk profile as a high growth portfolio? Considering that you wish to achieve your goal within 4 years, we suggest that a conservative portfolio profile may be more appropriate. So I can actually choose to change, or I can choose to accept the risk and continue on with a high growth portfolio. So come in here into the goal setting and have a good play around and see how your goals align to each of the risk profiles. and see where you can play around with that to achieve the optimum risk profile for the goal and the time frame over which you're trying to achieve it. That is a really, really good starting place. And just because you don't have a portfolio set up now doesn't mean that you cannot use this system. So as I mentioned, though, if you've got a goal of saving for a house and that's in a 4-year time frame, but you've also then got a goal of saving for your superannuation in your retirement, and that's a 20-year time frame or a 30-year time frame, then you're going to have 2 very specific goals, and therefore you can actually create 2 different portfolios. How you do that is you just go back to the dashboard here. You come to the settings section and you just click on create a new portfolio. There is no limit to the amount of portfolios you can have. So for each different goal, you certainly may have a different portfolio. So we've covered off that. Now, the reason why diversification really, really matters in this, now let's actually go back. Let's go into the risk profile section here, and we'll just have a look at these different risk profiles. Why diversification really matters across these is because you're taking smaller or larger amounts of risk depending on your profile to achieve your specific goal. Now, the diversification is important because all the asset classes have a different volatility and they have different return profiles. So the reason why diversification is important, even though over the long term Australian shares and international shares outperform all other asset classes, it doesn't mean that you should just be invested 100% in those. Now, yes, if you're investing for the next 10 years, by all means have a far higher allocation towards those. But if you're investing for a 5 or 4 or 3 year time period, or you're using that cash right now, you're certainly going to want to be sliding back down that scale to balanced / conservative. Now, each different asset class over the long term actually takes its turn in being the highest performing asset class. Believe it or not, there are years where bonds and fixed interest are the highest performing asset class. We just need to go back to 2008 to see that. It's actually even outperformed in this. This current financial year, considering all the volatility that we've experienced in global and Australian stock markets. So being diversified, because picking which asset class is going to outperform in the short term is near on impossible. Being diversified in terms with your actual goal is one of the best investment decisions you can make. So here at InvestSMART, we basically say we live by a couple of rules. You can invest, you can control the different asset class mix that you invest in. You can control the amount of fees you pay or the costs associated with investing in those asset classes, and you can control how much you can save or draw down each month. So they're the 3 things that you are in actual control of. The things that you're not in control of are your returns. So you've got no control over what the Australian market or the international market or even an individual company that you're investing in is going to return. So that's why we really believe in telling people to focus on exactly what they can control, and that's the 3 core things: the asset class mix that you're invested in, the cost and the fees that you're paying to get that exposure, be it, say, your transaction costs through a broker. You could is there a cheaper option that you can use other than that? Or your fees through a fund manager, or the fees that you charge through an exchange traded fund. If there's a cheaper alternative that does the exact same thing, we'd always be heading in that direction. So they're the things that we tell people that you can focus on. And of course, you saw there in that goal setting how much you can save, how much you can add towards your savings into reaching that goal each month. That's something that most people, generally speaking, can control as well. So do come into the portfolio manager section, even if you don't have a portfolio, and play around with that goal setting as you're getting started investing. Now that you've done that, now you've got a goal in mind, you've worked out the right risk profile to align with that goal, it's time to actually set out and see how you're going to go about doing it. Now, I'm going to take us through now to the research and advice section of InvestSMART. I'm going to predominantly focus on this research tools section here. So there's many ways that you can get to reach your goals. You can use different managed funds. So you could choose to use a property fund and an Australian fund and an international share fund, etc., to get that exposure. They do, generally speaking, come at a higher cost. You can choose exchange traded funds where you're just using broad-based ETFs to get diversified exposure to each of the asset classes. That is what we here internally choose to use. So I'm just going to click on that and get taken through to this filter section here. So this filter section is basically part of the InvestSMART Essentials package. So I think it's just $33 a month to get access to all of these reports and this filter section. And you can see here now that I can choose exchange traded funds based on their geography. So if I want Australia, if I want global, if I want Asia, etc. You can then choose your asset class. So equities, fixed interest in cash, property. You can just find already diversified ones as well. We've got commodities and currencies up there as well. So thinking about those different asset classes that you were looking at previously, when we're looking at setting the goals, you can see the majority of them here are actually covered off. And you can get, so equities, you can select equities, and then you can go US, et cetera, to get your international exposure. So we've got all of those asset classes covered here. Management type, you can get passive ETFs, so just an ETF structure, or a managed fund. That's where an actual fund manager is underneath the portfolio and actually picking and choosing what stocks go into that portfolio. You do take that passive side of things out of play, though, when you do go into that section. And if you're wanting to get just pure exposure to a specific asset class to align with your goals, the underlying holdings will move if you're choosing a managed fund. And so therefore you may, from time to time, not be aligned perfectly with your goals. So just keep that in mind when you're looking through that. Now, we have created a rating system. So if you come in here and you don't really know what you're looking for, I would just recommend, say, putting this to 3 stars and above or 4 stars and above when you're selecting a specific ETF for a specific location or a specific asset class. Now, what we've done here is, because a lot of ETFs look the same, we've actually ranked and rated the ETFs based on their costs, where they're domiciled, the liquidity, the buy-sell spread, and a few other little features that you don't need to worry about, but our analyst team certainly worry about when they're looking for ETFs. And so through this, you can just select the star rating, and you can cut out all of those ETFs that really aren't worthy of your time of taking a look at. So that's available on the passive ETFs. We don't rank the managed ETFs via this because it's very difficult, because the underlying holdings, etc., are always changing and moving. So just give you an example of this. If I go US, I'm going to go equities, and I'm going to say 4 stars and above. So you can see here I'm looking to maybe complete my international component of my portfolio. I'm going to come on down here, and you can see I think there's 5 there, ETFs that match the bill. So I've got the NASDAQ ETF, I've got the S&P 500. Now this IVV S&P 500 ETF is the ETF that we actually use in our international fund, in our international portfolio to get our US exposure. You can see here as well, there's a hedged version of that S&P 500 ETF as well. We've got then the iShares Mid Cap, so some slightly smaller companies than those are the largest 500. And then you've got the Vanguard US Total Share Market. So you can see here only 2 ETFs get the 5-star tick, and that's predominantly because the cost structure here. These ETFs will cost the end user 0.04%. So that comes out of your returns that you receive from the ETF. So really, like I guess any cheaper with these ETFs of 0.04%, they'd be paying you to hold it. So let's just scroll up here. So this is a really easy approach to starting to think about getting those different asset classes and that diversification that you require across them to reach your specific goals that we saw in that goals section. So another approach to it is actually coming straight to us. So I'm just going to walk you through here because we've actually recently introduced some pretty groundbreaking, really, if there's no other word for it, ways to invest in these diversified portfolios. So I'm just going to scroll on down here. We've recently introduced a product called the InvestSMART Professionally Managed Accounts, or PMAs for short. It's where we invest in a range of different exchange-traded funds for you, aligned with a goal of your setting. And basically, we have capped the fees on those portfolios. So if you have seen managed funds in the past, you're probably pretty familiar with how fund managers' fees are like 1% or 1.25% per annum, etc. So no matter if you put in $1 million or $10,000, everyone's getting charged that 1% or 1.5%, etc., and maybe plus a performance fee as well. So it doesn't actually cost the end manager any more money to manage $1 million than it does, say, $500,000 or $10 million or $20,000. The actual administration side of things is all the same. Now, the reason why most managers have to operate with a percentage-based management fee is because their suppliers, so the administration services, the unit pricing services, the custodian services, etc., they actually charge a percentage fee to the manager. So they might be charging 0.1% or 0.2% for them to provide their services to the fund. So we've actually been able to negotiate with providers, and we've actually able to get them to cap their fees on a per account basis. So therefore, what it allows us to do is cap our fees as well. So let's scroll on down. So remember how we're talking about managers typically charging 1%, etc. So we've got this here. We've got a sliding scale. Now this is just for our portfolios, our diversified portfolios. So we're talking about InvestSMART InvestSMART Income. We're talking about InvestSMART Balanced. We're talking about InvestSMART Core Growth, InvestSMART High Growth, our property and infrastructure portfolio, and our international equities portfolio. So that's 6 different portfolios that fall into this category. There's 7. There's the InvestSMART fixed income portfolio as well. So 7 different portfolios fit into those categories. They all align, of course, with those goals that we were looking at before. And let's slide this up. So starting at $10,000, you're paying less than 1% management fee. So you're paying $8.25 a month there. So let's scroll this up, though. And as we get higher, watch on the right-hand side that fee. So we're now at, say, $23,000. The investment fee is 0.55% per annum, or $10.54 a month. We're up to $50,000. So up to 80. You'll see if once we get past 80,000. So I'll stop here at 77. You can still see it's still at 0.55% per annum. I'm going to scroll up now, and you can see now as soon as we get over, I think it's $82,000. Their fee is actually capped, and the fee is capped at $451 per annum. So the more you put in, the actual lower the cost for you. So the management expense ratio drops down. So $451 is the absolute max that you will pay as a management fee on these diversified portfolios. So you can see what it looks like. Say if we go up to half a million dollars there, it's hard getting the slider to stop. It's like pumping petrol. Let's stop it at 505,000. You can see the management expense ratio on this particular on these portfolios goes down to 0.09% per annum. You see that the per charge month didn't go up anywhere from above $37.58 over that $82,000 mark. Now, yes, there's brokerage costs involved here because you actually own the stocks yourself. So part of our PMA structure, you actually have your own HIN. So it's not a custody model. where you get to see all your stocks, et cetera, but you don't legally own them. You actually legally own these stocks. You have your own HIN. You can get the contract notes. They are legally yours. InvestSMART just manages this portfolio on your behalf. You get incredibly cheap brokerage. If you think of that, $5.50 or 0.11% of the value. Now, if you think about the brokerage that you might pay elsewhere at other brokerage providers, $5.50 is incredibly cheap. The indirect cost ratios, well, we use exchange-traded funds to operate these portfolios. So they do have underlying fees within those individual funds, like we just saw with IVV before. That has a management expense ratio of 0.04% per annum. So the indirect cost ratio ranges between 0.18% to 0.31% per annum, depending on the individual ETF providers that we use. However, for the cost of all of InvestSMART's reporting to you and our professional services of hand-picking the individual stocks for you, you're charged no more than $451 per annum. So you can see that no one else is doing this out there, because the fees are actually ridiculously low, but we've got the efficiencies and whatnot, and we've negotiated with our service providers to be able to provide such a service as this for our members. So you can scroll on down, and you can see here balanced, the InvestSMART balance. You can see here the InvestSMART diversified, and if it's got this little stamp, that means it's capped at $451. Okay. So you can come to these portfolios and you can align these portfolios with your goals. So the InvestSMART diversified income, think about that conservative portfolio. That's what this one is particularly aligned with. The InvestSMART balanced, no guesses which risk profile class that's lined up with. That's lined up with the balanced profile. Scroll on down, we've got InvestSMART core growth. That's lined up with your growth portfolio. Then the high growth lined up with your growth portfolio. So if you had a specific goal in mind, and the growth portfolio was or the high growth portfolio or the balanced, etc., was the right asset class allocation for you when you were looking at the goal setting, you can come here, you can start with as little as $10,000, you can set up your regular contribution plan, and then you can put it on autopilot and look to reach that specific goal that you've got in mind for yourself over that time period that you've chosen. So you can come here, you can use the goal setting section, you can then align your risk profile, and then come over here to the investment with us section and choose the exact portfolio. And let's go in and select the InvestSMART high growth portfolio. It aligns exactly with the previous risk profiles that we were seeing. You can see the performance here of the portfolio over since its inception. Let me see, what am I trying to find here? I'm trying to find allocations and holdings. So you can see here the risk profile, the percentage that we've got here in this particular portfolio. So a huge percentage there to the international equities and the Australian equities, and smaller percentages of property, cash, and fixed interest. Okay, so you can see how that aligns with the risk profile that we we're talking about before. Now, to get further information about these portfolios, you can download an investor pack. You can schedule a call with myself and my team here as well, or you can also click Invest Now, and you can go ahead and invest online without having to talk to anyone, without having to fill out any paperwork, etc. Now, if you want to do this yourself, as in you want to handpick your own ETFs, or you don't want a manager to be doing it for you at all, that's fine, not a problem with us. Come up to this Research and Advice tab, and you can either scroll down and you can click here on our ETF model portfolios. Let's go into that now. And scroll on down, and we can actually go in. Let's go into the balanced portfolio. And here in the balanced portfolio, I'm going to scroll on down. We actually show you every single ETF we're invested in. We show you the exact weights that we have invested in each ETF, so you can go out there and copy this yourself. So you can actually build your own balanced portfolio to reach your investment goal by using the exact holdings that we use. So we don't keep any of this hidden for you. All people who have InvestSMART Essentials memberships for just $33 a month can come in here at any point in time, see our portfolios, see the individual weights in each, and see when we decide to change them. So what it's all about is coming here into InvestSMART, going to the My Portfolio section, going to the Goals section, selecting your individual goals, selecting your investment goals, selecting your time frame, selecting that right risk profile, and then going out there and actually aligning it with the right portfolio. So it's that easy. You can see here it even tells you what the next steps are about aligning your portfolio. And you can go in and do a health check, etc., of your existing portfolio if you've already got one and you've loaded it up into InvestSMART. So I hope that helps you out. I hope that gives you a better oversight into the InvestSMART goals section and what we're all about here. We're all about helping people actually reach their financial goals. Now, that brings us to the end of the formal part of the presentation. If there's any questions, I'm happy to take them now. But if not, thank you for joining us. I do apologize for my nasal nature. I do have quite the cold and quite the head cold going on. So I do apologize for that. But thank you once again for joining us. Do keep an eye out on the events section of this particular website. This is where we are going to have, where we put up all the different events coming up. If you didn't see last week, as the events go, they are cleared. Usually we do have a lot more on a page than this. If you didn't see last week, we had our portfolio manager, Nathan Bell, talking about his investment approach to our Australian equities portfolios. Coming up on Thursday, a really, really good webinar with the portfolio manager of those diversified portfolios that I was looking at just before, Evan Lucas. Make sure you join him on Thursday at midday as he walks through his decision-making process in those portfolios and talks about some global macroeconomic issues that we're currently facing. So thank you all for joining me, and we will catch you next time on another InvestSMART webinar. Thank you very much.